All right, ladies and gentlemen, hello. My name is Darius Androskas, and I'm the Chief Market Analyst here at Markets.com. And today is the second, ladies and gentlemen, Tuesday, the 2nd of September. So, yeah, welcome everybody. Look, I wanted to pick up on gold very quickly, yes, because what we're seeing right now is a little bit of a retracement. But before that, we had an all time high today. So, ladies and gentlemen, welcome to the new level for gold. We surpassed that 3,500 zone, hit the area around the 3,508. And now we are seeing a major reversal here, especially on the 30-minute chart. You can see a major reversal back down. Look, either this is we're done with the upside and now we're ready for a little bit of a retracement back down, or is just the usual kind of a retracement back down before the U.S. market opens up. Look, of course, everybody's speculating on the Federal Reserve and its interest rate decision and their interest rate decision, and we know that the kind of it's already like a done deal. It's going to be in September. It's going to be we have the 89.7% probability right now on the Fed Watch tool, and this is kind of also fueling the price of gold here to the upside in a way, kind of attracting investor attention because it's like a good store of value. However, of course, we understand that there are concerns. There are concerns of of an economic downturn, and people are jumping into gold as a safe haven. However, I said before, and I'll say it again. Whenever we tend to see the jump into gold before the economic downturn, so it's kind of it happens in a way like when everybody's piling up on gold, still the conditions are okay, the economic conditions are fine. Everybody's piling up on gold, and when the time goes, when the times hard times hit, people tend to, or in governments tend to sell gold because you need cash, you need to support your economy, because again you're not pay and do things with actually physical gold. So the only thing you can do is sell it. So that's where, like I said, that's why you need to be very careful when people are saying like, oh, you need to buy gold when the time goes bad. I think you need to buy gold before the time goes bad. When the time goes bad, start slowly liquidating that, because another thing is that what you could be missing out on is that people, when hard times hit, you need to kind of think of a method, or not a method. Like when the times hit hard, you need to understand that people also, kind of start piling up cash, starting to protect themselves a little bit because they need that liquidity, they need cash, and in a way, yes, for some. Gold becomes like maybe an investment possibility for some. For others, everybody, like I said, they're not going to pay for food or anything else with gold. So you need actually fiat money. And yeah, look, I mean, that's why I'm saying, that's why be careful with gold. Yes, the times could come, harsh times could come, but eventually, like I said, if you're going to pile up during the bad times, then in a way there could be some issues. So just like I said, just an idea here. Again, please do drop your comments. Of course, I would love to hear your opinion, because again, this is only my opinion. And again, maybe you agree, maybe you don't. But look, for now, looking at the technical picture on gold, what I would say is that yes, we created a new all-time high, but somehow right now we are selling off very heavily. And look, the interesting bit comes in here, that yes, the Fed is expected to cut rates, and that could fuel gold prices even further. However, I think it's more of a buy the rumor, sell the news moment. So when the Fed does cut, maybe actually gold could drift back down, so it could rally before that, and maybe actually the rally already happened. So because again, whenever we hit a new all-time high but then fail to stay above the previous all-time high, that to me like is a little bit of a bearish indication. And another thing right now, what's happening is that, look, if people are speculating on bad times, that those could come, and that's why we need to, there could be problems in the market, tariff uncertainty. Well, from what you see right now in headlines is that apparently, the tariffs might be overturned because they could be declared illegal. And that straight away puts everything back into kind of normal. And well, if the stock market could rally again, we could see that one pushing higher. And yep, gold could reverse course. So again, let's see how this is going to play out. Of course, for now, look, I'm going to go for some higher levels we do um, if we do see a strong push again above the 3,500 level. If we don't, I'm taking a little bit of a pause. But if we start falling back below this highlighted zone, which I talked about previously, the 3,430, 50, well, then I'm leaning a little bit more towards the downside. Ladies and gentlemen, that's it for this little quick update. I hope you found it useful. Thank you very much for watching and listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye bye.